Hello guys, welcome to the Train Parrot. We got a pretty busy week coming up in terms of events. I'm particularly interested on Wednesday, which is the core inflation and inflation rates. In today's video, I'm going to focus on a selection of alpha that I want to discuss with you guys, starting with the open interest, which we can see is doing something very similar as we did in August in 2024. And I want to make you aware of the situation where we are. I want to very quickly cover the volatility expectations for this cycle. If you haven't been watching my videos in the past days, I'll give you a summary of where I'm still placing my orders and whether anything has changed. We'll cover the 4-hour and this particular signal that is triggering at the moment. We'll cover the daily as well. I'll give you my thoughts around the CME gap we have above the price, as well with the one we have below the price. We'll cover good news with the big whale explorer. Make sure you hear this one. Short-term holder realized price as well. We are on Sunday, so we also need to look at the weekly close for the oscillators. Of course, all liquidity levels are going to be covered, including the most juicy ones next to the price. We'll make a stop on the alpha coming from high block capital, which once again found a local bottom. We'll see how we're doing on the delta, order books. One of the things I don't want to miss you in this video is to do with how tricky is the Fed at the moment, which doesn't surprise me. They say one thing, but they're doing something completely different. So stay for that part of the video as well to understand how this can impact performance of Bitcoin, not just in the longer term during this year, but also in the immediate shorter term. At the end of the video, I'm going to share an update on the SOPR signal, which is currently signaling an entry for one of these coins. We'll cover that in detail. Alright guys, we have a lot to cover and I want to make sure that the video is not too long so you can watch it in a single day. One of the things that amazes me is that the interest over time in Bitcoin and retail continues to drop the towel. I was already moaning when we reach a level of 27, but now we are registering at least an intra-candle non-confirmed number of 24, which if you consider that we came from a top of 65, that is less than half. And it's nice to see other sources of information like the one we covered a few days ago on the CPT channel, Coin Bureau Trading. Make sure that you are subscribed there as well. And by the way, guys, the last video made it to 500 likes roughly. Let's make sure that this video makes to 800 likes. I know I'm being greedy, but it's great motivation to see loads of likes, especially considering how tough it is to be speaking for 1 hour in a row while having your nose blocked and still with the flu. Many people are sick in the UK. I think it's been very cold and we have a wave of viruses coming in that squeeze all through the nursery into my house. It's crazy. Anyways, let's go back to price action. In this case, it's going to be open interest. At the top, we have the price action. At the bottom, we have the open interest. And we use the open interest during the megaphone pattern that lasted for 8 months to understand where were we, using it as an alpha to enter swing trades. And in this area in here, when we broke the support on the open interest, you can see here in light blue the time we did that, and we recover above it, putting this high. The price wouldn't have necessarily exit from the top of the megaphone pattern, but we were already getting very excited because this was forecasting the same thing on the price. One thing to note is after breaking below it, we came back inside and then we have a higher low and then we remain inside the range. So that was kind of the behavior in August 2024 to produce this liquidity hand that led to the open interest to go from $15 billion into more than double. Indeed, $34 billion has been kind of the resistance that we are currently battling. Now, if we compare all this area in here and this liquidity hand, and we start speculating that this could become another liquidity hand, in that case, I will expect that this higher low relative to this should re-enter this area, pointing towards the 31 billion. Very similarly to what we experienced in here. After that, we came back to test the support that we recover. In this case, we should go back into 29 or 30 billion. And after that, we can start thinking, okay, we are due for a potential breakout to the upside. Notice that all of this is happening while the price is all flat in here. So it's only the open interest what is giving us these clues. Whereas in the megaphone pattern, well, it is a megaphone pattern, so you continue to put new lows and new lows until eventually, even though the price looks flat there, the open interest starts putting higher lows, creating bullish divergences against the price. That is what gave us a lot of confidence in here that we were going to exit from the upside. If we focus on what's going on here, we also see very flat price action, even a slight lower low, very similar to what we see in here, but we are seeing the open interest doing the opposite with a higher low. So that is what's keeping me putting attention at this. This is not necessarily something that convinces me to use all my volume to enter in here. Remember that I'm still DCAing. If I was convinced 100% from this, I will probably scale up my position. All this is doing is convincing me to hold on to that position and even wait still for a potentially move swiping the lows that we've been talking about in multiple videos from 89 to 88 or possibly even to 85 depending on how much liquidity you want to count. So that is alpha number one that I wanted to cover and keep you up to date. We have bullish divergence on the open interest being wiped out even with the price action going lower. January remains flat just like December in terms of returns monthly. We got 2.85 in December and 0.14 in January, when typically at this time in the cycle we tend to see extreme moves like 46%, 50% and stuff like that. Yes, I agree, we have a very positive November, which we were, or most people in crypto were saying November tends to be not as good. So we have done a lot of progress already. Let's talk about volatility, and here we have the Bollinger Bands width, which is just another representation of the typical Bollinger Bands indicator, which is very popular, with the same settings on the weekly time frame, with a logarithmic scale representation of all the history of Bitcoin, so you can see each and every single all-time high. And you can tell that volatility peaked in 2010, then it reduced in 2013, and every single cycle reduces and it touches this curve that I added to the chart, kind of doing a manual regression so we can get every peak to touch it. This is something, a little bit of an abuse that I'm doing in terms of mathematics. So if there's someone there that's studying mathematics and sees me doing this, you can write a comment. You have my permission to complain because I know it's not the way to do it, but I just wanted to see a graphical regression very quickly. Whether it's valid or not, that's another discussion. But you can see that it reduced very fastly, but it became asymptotical somewhere around here, right at 167. And we are kind of halfway through towards that. We are at the moment at 82 with a peak at 91 this cycle. Where we should be peaking is somewhere around 170 in terms of volatility. So what this should tell you is that we should be expecting more volatility. Now, people are going to say, maybe this time is going to be different because we have the ETFs and institutions are the ones that are mostly trading this whole cycle. Retail is acting like a tourist. They come and go, come and go. And if you don't believe me, just look at these waves in this cycle that are becoming really pronounced. They come every top. This top, retail peaked, price went down, they fully left. They came back once it peaked again. It's almost like they really make honor to the name dumb money, because that's precisely what they're doing. They come every time the price is about to reverse, they buy tops, they get stressed, they sell, and they come back next time it's high. They keep throwing the money at the wells. Previous cycles, it was a little bit less intense. These oscillations, they were leaving but not fully into the red like you can see in here. Every time they leave, they pretty much panic sell everything, leaving them with very small allocations of Bitcoin held by retail. So who the hell is still holding at those points if retail is stepping back so much? Well, institutions. Institutions continue to hold and add a little bit more. Otherwise, the price will just collapse massively, right? And based on that assumption that this is institutions, now the question is, one, can this really get to that level that we used to have of volatility? Or are we going to see a substantial decline in volatility that's just going to remain like that and close the cycle? I think volatility was increased thanks to retail because those are the ones that most of the time act like a tourist generating the waves of volatility. And if there was liquidity injected in 2025 and they really came back to stay a little bit longer than they have so far, we could get to those levels of high volatility. How does that impact you? Well, that could bring a new leg up in the market or a second top later in the year. Just a very quick summary if you're wondering what are you doing with your orders. Remember, I'm targeting this area in here between the 0786 in terms of Fibonacci trend extension. I'm doing the extension from top to this bottom and to the first initial dead cat bounce that was 102.7. And that projection gives us from 89 to 85. This is consistent with the levels of liquidations that we have there. That's where I'm placing orders. And with the price action so boring and coming back into the range, it feels almost like it's going to take too long to fill those orders, or maybe I'm not going to even be able to fill them. But I think we have a good chance to do that with all this liquidity just standing there. One of the things that could happen with these head and shoulders that everybody's talking about is that they might get disappointed. Why am I thinking that? Is it because the head and shoulders is not bearish anymore? No, head and shoulders, it is bearish. What is not bearish is that everybody's talking about the head and shoulders and the targets of 75 and preparing orders in here, generating a lot of demand there. Market maker doesn't like to please the majority, so we need to start thinking if this start taking too long to go to 75, if something else is going to happen. That is kind of your responsibility as a trader. Whether we are wrong and we still go to 75, well, that's fine. I still have orders there, so I can afford to be wrong. But what I cannot afford to do is to start thinking like retail, which is like ships just listening to what everybody's talking about and never challenging what is the common agreement. So what is currently not common agreement is to start thinking that we could form a pattern like this. If we form a pattern like this can have a breakout to the upside from there. It could even sweep the lows still and then exit from the top. Many times you see a breakdown on Bitcoin like this, and then you also go back up in that way. So I'm just doing kind of a brainstorm live with you, thinking about past performance and all those times that I used to just read what the chart says, then hear it from everybody else out there and thinking, oh, I'm really clever. Everybody else is thinking the same as me. I should stick to my plan. And then suddenly I see the price doing this and I say, wait a minute, what happened? And I guess that's my point. Let's go to the 4-hour very quickly. You can see that we recovered the previous range by doing this move in here and going to the PNR levels calculated with statistics of 29. You can see that we bounce, we re-enter the triangle, and now we are inside the squeeze. So far, we haven't been able to do the breakout that we were talking about. I think I placed that resistance at 52, somewhere in here, but we never got above that. And so far, we are still inside the squeeze, and we need to update the values because obviously we cannot get to RSI 52. At the moment, the resistance is more like RSI 48, I will say. So let's change this to 48. Support now is 42. Represented by this point in there, and we still have the PNR at 29, so let's leave it like that. The 77, which is the PNR at the top, we're gonna also leave it like that. Now let's enable the RSI and let's see where we are. You can see that we are in a squeeze at the moment. The triangle is causing that the support is very close to the price and the resistance as well, which makes it much more easy to start forecasting potential direction. Remember that this is just 4 hours, so this could be an early entry, but a low quality one relative to what the daily is doing. So support is 93.6, immediate resistance is 94.6, and those PNRs with extremes are 104.3 and a full reset at 90 if we were to come back here and lose the level once again. This signal to me is an important one because this is the cross-fee ratio. It works really well. It's not 100% accurate, but you can tell in here that it gets very close to buying areas. If you follow the horizontal line, you see in here there is a reversal coming up that reaches 102. This entry there is even better. This is the one that gives 11%, and we are now inside the green area. So this doesn't mean go and buy. It means great time to start looking for longs and looking at the whole bull market. Every time you enter in the green, if you're not at a local bottom, you're getting very close to it. If you are used to DCAing your orders, using 2 consecutive ones while the price is coming down works really well. Of course, the higher the time frame, the more accurate and better quality the signals. Cross-fee ratio on the daily, you can see still not touching the green, so that is worth noting as well. So maybe keep some funds in case we were going eventually to that green, which might never happen in the short term. So let's do daily analysis. The volume profile is showing us that we are still ranging. I still remember the day I placed the volume profile, which was more or less on the 21st of November. And I placed it in here and I started talking about ranging in the price. And I asked people to forgive me that I'm going to assume that we are going to range, but indeed I didn't know we were going to. And that's what we've been doing since November. And now we are in mid-January. We are in the bearish range below the point of control of 97.4 since we did this sweep in here of the highs and this rejection at the top of the range the other day. We still don't touch 89.8. We seem to get bought every single time we do such a thing. And I've been looking at the order book on FAR charts. This is the old chart from Friday, I think. I'm going to refresh it just in a second. And you can see so many people wanting to buy where I want to buy. And typically when I see that, I turn my order into a market order and I just go and fill it slightly higher, because it's very difficult once you see too much demand that you get it filled. Notice as well that with the weekend, or actually at 6 p.m. on Friday, that demand diminished quite a lot from 45 to just 30 million. And it has remained like that over the weekend. There's obviously less volume. You can tell all the times that the demand increases below the price almost never manages to get to those levels to fill the orders, and kind of similar effect you get at the tops as well. Let's talk about CME. We have a CME gap at 97.1 that without the premium from CME, that is roughly 96.3K. And on Friday, we went offline on CME and we didn't touch it. Over the weekend, the price fluctuated very little and it hasn't gone to this area. Remember that if it went to that area today on Sunday, still during the weekend, that doesn't constitute filling this gap, because to fill a gap, it needs to happen while CME market is open, so that liquidity that is located at those prices can be executed. They are still waiting there to do something, and that is what attracts the price into those CME gaps. So closing gaps during the weekend, in my opinion, is not valid. I haven't seen any that I can remember. The closing price on Friday was roughly 95K. Again, that is like 94 point something. And the whole weekend we are just going sideways around that price. So if you are new to CME gaps, if during Sunday we went to do a significant pullback at the open of Monday, typically that means that you have a gap, and gaps attract the price. So if this was to continue going down or something, that's going to become more difficult or less likely, because price will want to go here and take care of that imbalance. So the best scenario, or the best way to use this alpha, is to wait that over the weekend we move down a little bit, and then we have the 97 gap and then potentially another gap, making it even juicier for the price to want to go up. The opposite is if we start pumping in here and we leave a gap below together with the 97, making it a no-brainer to have to come back down later in the week. Yes, and even though the monthly 2 candles with wicks to the upside is looking really ugly, I am seeing the whales, the large holders, withdrawing at a faster pace. You can see the areas of accumulation here in the bear market on the FTX collapse. Then during this period that was quite depressive, I remember August on 2023, after this collapse, people started accumulating. We talk about the accumulation from whales, and later in this area that was very bullish with the breakout. So here we are once again getting very close to that line in orange, which is more or less 0.4, below 0.5. that is quite a lot of large wells that are accumulating. Remember, this tracks withdrawals and deposits, the ratio of those two things. The source is into the block, and withdrawing and deposit doesn't tell you the precise timing of their buys or of their sells. Is all very speculative. For example, seeing this bottom there and the price already move up, this is the timing when they register the withdrawals. That doesn't necessarily tell you that at that peak was when they were buying. Potentially they were buying all the way in here with orders, and when they were done and the price pushed up, they say, okay, time to withdraw. And that is what this is tracking, and at the moment is tracking that withdrawals are more than deposits from large wells. Short-term holder realized price. We care about this because it's the average position of the short-term holders, and it acts as a strong magnet to bring the price back towards it every now and then in the cycle. And at the moment is almost at 87k. In previous cycle, we will have been really happy about that, because we were respecting the short-term holder realized price religiously in 2017 and still good in 2021. In 2024 and 2023, it's been just all over the place. We spent months below it and these months above it. So whether this is gonna just bounce there perfectly like we did earlier in the cycle a couple of times, or if we are gonna spend a few months below it, no one knows. But at the moment, that is a point of reference to know that the short-term holders could enter panic if the price starts getting too close to their entry average position. We are now back into grid. On Friday, I did an analysis comparing the performance of the fear and greed index of 2021 with this push back up into the extreme grid in actual grid, and that we should expect a bounce somewhere in here, maybe after bottoming at 40 or at 50. And we are in the process of doing so. I think this bounce to 62 is still not there yet. I will expect to bounce somewhere at 40 or even 30 this cycle, but we'll see. Long-term holders continue to just not take any action yet on this correction there. No buying, but no selling either. Weekly oscillators update. We are on Sunday and we are about to take the final picture of how things are going to look for Monday on candle close weekly. And you can see that so far it's looking like a rejection. We need pretty much a miracle in here to turn this candle pointing down with a lower low to recover the yellow line and start hitting resistance at 73. We talk about those targets at 104. Unfortunately, we untangled the cross in here, which was going to be a bullish one as well, but it is what it is. I'm just going to give you a little bit of hopium about this because, for example, in here in the cycle in 2021, we were in a channel up. This is the strongest leg compared to this leg in here. It made it just to 79 and this made it to 95 RSI. Then we have in this cycle this channel and then this secondary channel that recovers back inside it and now is losing it. So it's very difficult to compare weekly RSI between these two sides because in here we were in a channel. It was very easy to see the rejection right there and then the collapse into support. And one of the things I'm going to show you that is actual hopium for you, because it's not guaranteed that it's going to happen, is as you can see, we have a top of RSI at 95 with a price of 39k, but the top of the price is around 65, and that happens when the RSI will have already retest, broken down, and put a lower high. Even this lower high in May, it's already priced at 58k. That's a great exit. And you can see that this is retesting and still putting decent prices. So this is the highest RSI. Then we get a lower RSI with this price, and then another lower RSI, and another lower RSI, and at this point at 58 is the first time that the price cannot manage to put a higher high in price, and it starts following what the RSI has been doing already from here, which is to go down. What is my point? RSI start doing everything anticipation for something. It's kind of a leading indicator if you use it in such a way. So if you see the RSI peaking and starting to come back down, you know that you are in the process of creating bearish divergences. And those bearish divergences imply that the price can continue going higher. So we are in that process already, right? So I don't think on Sunday we're going to start pumping. It could happen. Don't take my words. Bitcoin can do whatever it wants. but the highest likelihood at the moment is that we close like this, and next week we could put a lower high. That lower high is the third lower high in the weekly, okay? So that could bring some upside. If that week we recover the yellow line, we're gonna be with a mixed bag. Happy because that is bullish, but annoyed because it's gonna make the market really complicated in here to understand what the weekly is saying. But let's not get ahead of ourselves. The hopium is that if we close like this, watch out for a potential higher high. It is hopium because it's not guaranteed, but that move up could bring some relief in the price. The delta was almost $1 million in high block capital, and that calls for a reversal. That is what the alpha is saying. You can tell that the price moved up, and there was here market manipulation clearly. This on the 1 hour time frame is calling for twap, which is when they split these orders just to take the price somewhere. Think about it as if God was in charge of the price and started just moving this thing wherever he wants, drawing it with a pen. So it doesn't look like normal price action, there's no swings, and eventually reaches a level, hits all those stop losses and liquidations, the price crashes this way, this fills all the gaps that were left behind, and the price goes once back again up, liquidating some other players. And all of that as a consequence reduces the delta. The important part here is that the delta is still elevated at 560K. So this is still calling for the shorts being at higher risk, and I don't want to place a short together with a wall of 560K of shorts already at risk. Their liquidations are all somewhere in here, so pretty much where we are until 104K. Let's look at the alpha from high block capital, which is working really well in combination altogether. We have the funding rate negative that this day was flagging red. That is ideal for start looking for longs. You don't trade it by itself, but in combination with the order book being at high levels of bid liquidity, similar highs as this, but with less intensity during the same period. In here we were for a few days with high levels of bidding, people buying, placing orders to buy this dip. In here it has been less, but it was sufficient to push the price up. But looking again, this is the manipulation. This is 1 hour time frame, and you can count how many candles that are just green. It's 13 bars. That is disgusting. This is not real price action. This is just manipulation. They really wanted to move the price there and hit someone. And once they hit it, that liquidation came back down, and then they produced another pump right after. Liquidations of the past 30 days, we got 96K. Very interesting, because that 96K is in confluence with the CME gap that appears with the premium of 97K. And at the moment is the largest liquidation level. So I think it's doable to do that. 103 continues to be the highest one, but a little bit further above where we are at the moment. Roughly 10K more we need to move to hit that level. The fair value gaps that we created on Friday, they're all gone thanks to that manipulation. Price went up, created the gaps, and immediately pinched back down to 92 to take them out. So the question now is, are we going to go for the 96 that is just there, or are we going to continue with the rest of the fair value gaps? Well, we're going to have to look at what happens on Monday with the market open. At the moment, there's very little volume to start speculating, and crystal ball reading on a Sunday is not something that we should be doing. We're just identifying all the things that we have on top of the table in preparation for the week. One thing to note though is what the Fed is doing, and this is just unbelievable. After the breakout in here, adding to their balance sheet, which was calling, or at least I was very excited with an expectation of seeing a breakout in this direction, because what I want to do, or the alpha that comes from this, is if the Fed is adding to their balance sheet, that is bullish, particularly when they are in meetings talking about everything is bad for the economy, that they're going to become more hawkish or whatever. And then suddenly you see them buying. In other words, do what they do, not what they say. And a few days ago, I think a week or two ago, I was very disappointed to see that we fake out with this breakout. We came back down to the same level as in September. Very disappointing, because that means that there's no further liquidity coming in, and that won't help Bitcoin. But now we have a new candle showing a potential double bottom in here. So again, nothing that you can really be absolutely sure, just a little bit of hope that at least this might not just continue collapsing like this. And I personally take that because gold at the moment is breaking out from the symmetrical triangle at 2.689 at the moment, although it's going against the trend because we had a breakdown weekly on the RSI. So we'll see how high gold can do. Hopefully not a new all-time high, but the conditions at the moment, or at least what the economy is trying to convince everybody, is that you should rotate into gold, that dollar is extremely strong, and to stay away from risk-on assets. That is the speech they want to deliver. And our task is to try to read between lines, look at data, look at all other sources of honest, hopefully, information to try to reveal the actual truth. An update on the monthly, which is very disappointing, and I keep scratching my head what could be wrong about this analysis, because so far it feels like something is off. This is the RSI monthly on Bitcoin. And you can tell that in the first cycle in here, on the left-hand side, you reach the levels of 96, then 95, then 88, and at the moment 71, which is too low to be a top for RSI. And I don't even care about the price. I just want to focus on the top of RSI. Why RSI is so low? And why would that be a market top? Well, there's one angle that says that this could be a market top for the RSI, not the price, reminder. And that is the linear regression of the length of time spent above 70 on the monthly RSI, which is 396 days, 337 days, 181, and thanks to doing linear regression, we get 92 days, which is 3 months. And so far, we did month 1, month 2 was 69.89, so almost 70 by a cent. And the third month will be January, okay? That's 92 days, and we are at 70.1. That's ridiculous. So from the point of view of timing above 70, this seems to be it. But from the point of view of scale, of magnitude of the RSI, we're too behind, right? We need to get to 80. We are missing 10 points. And if you think 10 points is nothing, well, at the moment, getting to 79 will take us more or less like 20,000, a little bit more than $20,000 up. That is if we started pumping right now. If the price rejects 108K and we start going down and we go, let's say, to 75K and we spend there 3-4 months just goofing around, scaring more people, and suddenly they start printing money and we start recovering. Just hypothetically, if we do that, that target of RSI 79 can reach way higher prices. If you watch the channel consistently, you probably know all the intricacies of trading with RSI and targets based on that. The lower the price goes, the same target of level of an RSI becomes a lot more in the price. Let me show you an example. In 2021, we did a correction of 55%, right? So this green line, when the price is high, the target is 56. When you collapse, that target goes to 170, the same RSI. So that's a perfect example. It's almost like price and RSI target spread away. And before I let you go, guys, and I'm almost dying with this flu, my nose is so blocked, I cannot even breathe. And I'm still talking about Bitcoin with you guys. If you appreciate that, hit the like, share the video, subscribe. So here is SOPR. SOPR is an indicator from on-chain data, and all you need to know about this, you can research it. There's a lot of crap that you don't need to know. What matters is that if this is low, it means that people are selling at a loss. If this is high, people are selling in profit, big profits. Selling at a loss calls for local bottoms. Selling in profit calls for local tops. And we've been looking at this week because we are touching the floor, both on Bitcoin and Ethereum. So what's going on today that is special? Well, we confirm a signal on Ethereum. That is a buy signal, and that is because we bounce off the top band in there and we close the candle being above it. So I'm going to show you a few times that has happened, and then you can do an analysis. You can see even in the previous cycle, you get these buy signals there. And when you enter the bear market, you get some nice moves up. Those are moves up because too many people sold at a loss there. And even if you are in a falling knife, those events 99% of the time lead to some upside, even in the bear market. Exceptions. Well, you get a signal in here, right? And then the price bounces, but it bounces very little. You could say that it bounces from maybe nothing, right? This one bounced a little bit, but most of them have some bounce. In the bull market, the signals are just beautiful. So as long as we are now in a bull market, that signal should bring Ethereum to higher prices. For example, here we have an exception. This price went up just 5% and then it had a drawdown of 10. And then you should have been adding in here to then enjoy a nice 126% up. But that is kind of the way you need to think it. These are not scalping signals. They do require to have additional funds to add if you get another signal, or to trade it on spot and just leave it there and wait until the upside comes. I think the signal should have trigger on Bitcoin as well. I think at this point this should have crossed that, but maybe the data shows something different. I think the area is still the area of interest for me. I keep my eyes every day on how we are doing on this to see if people continue to sell at a loss, particularly because most of them are expected to be retail. And once retail is done, you get all these bottoms, so you get the confluence of confirmation from different angles. One report telling you that retail through the towel, that is already a great signal. Shorts are in risk, good signal to put together with the other one. And SOPR being at a time that in bull markets tend to reverse 99% of the time. So building my position, here I am. Let me know in the comments what you are doing with your investments in Bitcoin and altcoins. Guys, if you want to trade with an awesome exchange that has all the altcoins that you can ever think of, good quality support, offering the best products like, for example, trading bots as well, then I will say go for Bybit or go for OKX. They're really strong exchanges and I've been using it for years. If you use the link in the description, you can claim 30,000 in rewards with Bybit and 60,000 on OKX, and also enjoy the lowest fees in the industry. If you're looking for an exchange that doesn't require KYC, I have two alternatives today, Bluffin and 2bit. The links are also in the description and you can see in the screen the promotions that I currently have. Not needing KYC is extremely important because you can create as many accounts as you want with different emails, separate pairs and apples in your trading, which is awesome. Not having any issues to withdraw and deposits coming from KYC requirements, not needing VPN, which is great when you're traveling as well. All links are in the description. I'll see you in the next one. Bye bye.